Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 14th, 2021. I'll try to do a little bit briefer video this time, so I'm gonna kind of go faster. So we'll look at stocks. Again, they're approaching new records. We'll look at a bunch of different sectors which are about to make new records, for example, energy. And Spain, for some reason, is leading the European stock markets higher. We'll look at that. Junk that is approaching 52-week highs. This will be great for stocks if they make new records, so because they correlate highly. Again, I'll explain what I mean. Trading range narrows from unibonds, and also the downtrend continues for investment-grade corporates and treasuries. And we'll finish off with dollar and gold interplay. I also have two more newsletters, which are paid newsletters. So here I will cover in those separate videos, I will cover all of these stocks for the elite service, and more for speculator service. I will cover all of these stocks. There you can see there's quite a bit, and we trade those stocks in that service. So let's get started on S&P 500. So S&P 500 is again approaching new all-time record highs. As always throughout the presentation, I'm using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. They're the green, blue, red, and yellow lines. And on this chart, what this all means is just we made a new record. In fact, we made a new records right there on the 10th of May. The indicators, what they do is they perform a calculation. It's calculated indicators, and they draw these lines, and these lines are just really good levels to watch for some sort of a bounce or a bottoming pattern. So you can kind of see the same general principle we did back in April of 2020. We saw a breakout above this support resistance line where I'm hovering, the blue line, and then we basically started buying at that point, and we were holding, in our retirement portfolios, for example, since then, because you can see that there was not yet a touch of the blue line, and that would have been my exit alert. Here's Dow Jones Industrial Average at 34,000 currently, with a new record at 35,091. I think it's gonna go higher easily. Now we don't know exactly when, but there is a good chance that the stocks will make a new record very, very soon. Here's NASDAQ again, pulled back, from all-time records. It looks a little bit different, but again, correlations are very high. I'm going to show you what I mean. Here's correlation coefficient. And you can see that it is above zero. The zero is like right there. And what that means is when the correlation coefficient is above zero, that means they correlate highly to S&P 500. This is a correlation coefficient to the S&P 500, the mini future, the futures. And so a little bit different. You can see there was a little bit of a dip into the negative territory. What does that mean? It means that S&P was going up while NASDAQ was going down in this particular case. But overall, generally speaking, the correlations are high, and NASDAQ should continue higher and also make a new record. I don't see a reason for NASDAQ not to make a record if S&P will. Same goes for a small caps, IWM small caps. Correlation coefficient again very high, so mostly positive, and that means that stocks and S&P 500 and small caps are moving together in lockstep. So we should expect new records. However, you can see that the lines are getting closer together. And what does that mean? That means that there is a narrowing of a trading range, the distance between the green and the yellow lines in this case. And if they get very narrow, I'll show you in a few minutes, then we can expect a change of trend to the downside. But that doesn't mean that we're going to have it right now. In fact, I think new records are much more likely than even a small shallow pullback. Here's a few of the new records. So this is Energy XLE, and this is an actual alert again here on the 8th of February. And you can see a nice surge higher with a new record. So, at this point I would still be holding this because my stop is at the actual blue line. So as long as we're making new records, we should be fine. So Energy made a new record. This is obviously good news for oil companies, and we are trading oil companies. Some people don't like to trade oil, but it's sort of a personal decision. So we do trade Transocean, WT offshore. Let me see if there's already Occidental Petroleum, PBF Energy. So there's a lot of oil related that we are trading right now. This just happened to be because the breakout patterns are so nice, and this is the breakout pattern I'm referring to. So Energy XLE broke out right there on the 8th of February and then surged. So at this point we would have bought it, and we actually did buy it. This is an actual alert. So a few more stocks, sectors that made a new record. Again, this is just showing you that there is a very good chance that the rest of the sectors will also continue higher, and vast majority of stocks also kind of move in lockstep with one another. So there's a good chance that the new highs will continue. So here's XLF Financials making a new record here on the 10th of May, pulled back slightly, but we're very close again. So seems like we're gonna make a new record. Same goes for industrials, making a new record on the 10th, very close to new records. So again, these are very offensive sectors. Financials is a high risk sector relative to, let's say, utilities. So financials is a high risk sector relative to utilities, and you can see that it is at new records. So what does that shows us that investors are actually quite optimistic about the future, and they're buying even higher beta higher risk sectors such as financials. Same goes for industrials. Industrials is a also an offensive sector, compared to, let's say, utilities of staples. And the same thing goes here. We're making new records. Here's even staples, XLP, even though they're considered less volatile, they're still stocks, just like utility stocks. They're not utility bonds, for example. So energy, utility, staples, financials, they're all sectors of stock market. And as I just kept pointing out, the correlations are high between the different stock funds, and therefore we should be looking for buying opportunities within pretty much every single sector out there, which is what we're doing. We're scanning the entire universe for various good setups. So I can show you what I do. We go, we have a scanner, so a stock scanner, and the scanner scans all of these different stock funds and finds setups like this, for example, breakouts where the blue arrows are. So this would have come up on the stock scanner back in April of 2020. Right now, this particular ETF, XLP, is obviously, next to the records. I wouldn't want to be buying it. But if we do get a pullback towards the blue line, this is where I buy. I want to see a pullback towards the blue line. So something like this, you can see. And XLV Healthcare again made a new record, although some of the stocks are struggling, but the vast majority of stocks are doing quite well. So overall, even though XLV Healthcare is not exactly an offensive sector, it's not exactly a defensive sector, it's somewhere in the middle, and it's still making a new record. So overall, there's a huge amount of market that is making new records, and this is good news for the stocks. I wanted to just kind of point out that we do trade foreign ETFs. So here's, for example, Spain. And what I like, I like my own charts, what they're going to say. What I like about my own chart setup is, first of all, it's not crowded. It's very clear. You can see there's only 4 lines on this chart. And this is all I really need. So for this particular trade, EWP, you can see there was a breakout right there where I'm hovering on 10th of November. Now I don't know exactly what happened on the 10th of November in Spain and what was the reason for this breakout. But I'm sure something important happened because investors have felt the need to be buying it. Me, I don't have the need to investigate why. I only have I need to ask the question, what am I buying or what am I selling, and how am I buying it and how am I selling it? And so the system, my system, says buy and close above the blue line, and then set your target about, you can set it even at the green line. Again, you can have the same lines on your chart, just let me know. So the system itself, there is a video, I can share it with you as well, about my stock trading, how I trade stocks. Here, what I want to just show is the fact that these are new records. Let me see if they're 52-week highs or they're probably 52-week highs. Right, they're 52-week highs, but they're still, records for the post-pandemic. We're sort of entering the post-pandemic here, especially in the United States. We're seeing basically return to normal with the just massive vaccination campaign, and not even a massive, we have like 50% or 60% of the adult population vaccinated in the United States, and it is already extremely effective. So I urge everybody to get the vaccine. There's absolutely no need to gamble with your life, and the side effects are inexistent. I had it myself. There was barely any side effects. So here what I wanted to show is EWP, the Spain, again, making a new record, and compared to other stocks, it looks like it's set to outperform. Again, I don't know why that's happening, but it is happening. And if you did open it back in November of last year, that's a 20% gain right there. Okay, moving on to the bond universe. So junk bonds today kind of gapped up, which is a good sign. I'm going to show you. So there's a little gap right there from yesterday to today. Not yet a new record, So once again, the stocks, this is a correlation coefficient, so it's a correlation to the stock market. And basically, stocks and junk bonds correlate highly. So if stocks go up, junk bonds also go up. On very rare occasion, they don't correlate. So what I'm trying to say is I'm hoping that junk bonds also make a new record. If they make a new record, then I will relax and say, okay, now we have a confirmed bull market, as if we need more confirmation, but it's really good to have junk bonds on your side as well. So for now, we're just still waiting, and hopefully we'll make a new record. Even 52-week high. Here are municipal bonds, MUB. So again, you can see that the lines are narrowing. So you see how green line and yellow line is so close together here, versus even in March, they were really far apart. So what does that mean? That means that the price really has very little distance to travel towards bearish levels. So bearish levels are, around 114 currently, and we're at 116. So we're not that far. This is, right there. It's like 2% difference basically. And when the trading range narrows like this, this usually means there's a good chance of a change from an uptrend. So this was definitely an uptrend in security. We were actually buying it right there. It was one alert on the 7th of April 2020 and another on 27th of April. Very successful trades. We would have been still open. In fact, we're getting close to an exit alert. So an exit alert would be when we have a position open from, for example, back here in April 2020, and we have a winning position, and now we're coming down, and our blue line is the stop. So we're gonna be exiting pretty soon if we close below the blue line. So what I'm trying to tell you is that not only it's happening in real time, but we can also project my indicators into the future. So this is a 6.0 version, MasterCharts Trading Price Action Indicators, and projecting them into the future, you can see that it's getting even more narrow. So a high probability of a trend change to the downside. We need to be on the lookout for that from Unibonds. But at the very least, we're getting close to exit alert for profitable positions. Same goes for LQD. So LQD, see how the trading range narrowed? The distance between yellow and green lines back in March was quite wide, but then it got really narrow here back in April, and this is actually a bearish signal right there where I'm hovering on the 7th of April. So it seems like we're gonna make a new low, It does look like it's gonna continue lower from here. This is investment grade corporates. So the higher the grade right now, the worse they're doing, the bonds. And here's TLT, Treasuries. Treasuries again collapsed back on the 6th of January, the date of the insurrection. Again, I'm not sure they collapsed because of the insurrection or was it a coincidence with that date. Some people actually shorted it, and it seems like we're gonna make a new low. So a good chance we're gonna continue lower from here. Okay, switching again to dollar index. So not looking good for my I'm thinking gold will continue lower and dollar will continue higher, but it seems that I was wrong, and looks like dollar may actually make a new low. We're very close to new low. Unless dollar just starts to rally from here, gold will come under, gold will be relieved and will continue higher. In fact, I have a gold short. It's still open. I opened it right there on 8th of March. And you can see it's not really working, especially with today's close. It looks quite bullish, so I'm afraid we're gonna see a gap up on Monday, unless something happens to the dollar and we're gonna, gap down. Gap down, and for the dollar, there'll be, gap up for the dollar. So in that case, the gold may continue lower. I'm short gold because XAU over USD. So if the lower part of this equation, USD, gets stronger, gold will get pulled lower. But there is a good chance I was wrong and dollar will not continue higher. If that's the fact, then we are going to have to close our shorts. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com and we will get you to the same place. Go to products and sign up for one of the packages. So the best thing I think to do is to get indicators and newsletters. This is the middle package. If you trade a lot, then get the indicators and newsletters, and also separately an advanced scanner. This one will, you get a lot of different setups. But for the basic indicators and newsletter package, you get the trading indicators. So this lines, I will open the door for you. You can have them on your chart. You get lots of training materials. You get access to me. You can ask me any kind of questions. You also get two different daily newsletters. One is called Elite, and we cover about 100 securities in it. For example, let me show you. One second. I want to show you what we trade right there. So we trade different securities in different newsletters. So for the newsletter, for the Elite newsletter, we're looking at common ETFs, current foreign ETFs, some forex, cryptos, commodities, and a few select large cap stocks. Overall, about 100 securities here. And then in the speculator newsletter, excuse me, in the speculator newsletter we cover different stocks, and this is just a screenshot or a shot of what happened in February 2021, but we continue cover different stocks. So for example, currently we're going to be covering all of these stocks, and we trade all of these stocks in the speculator newsletter. Alright, that's it for this week's recap. If you have any questions, let me know. Thanks for watching. Have another great trading week. Bye bye.